Welcome to this week's look at the state of the New York City real estate market. This is for the week of April 21st to the 27th. We'll get started with the luxury market. Then we'll take a look at what's going on in Manhattan and Brooklyn. And then at the end, I'm going to give you some additional information about the market conditions and share some best strategies for success. There were 28 contracts signed in the luxury market. This is for properties that are priced at $4 million and above. That is 5 fewer than the previous week. And condos outsold co-ops 21-4 with 3 townhouses in that mix. The number one contract last week was a townhouse at 16 East 64th Street. It was asking $25 million, listed in March of 2024. This is a 20-foot wide 6-story house with 8,700 square feet, including 5 bedrooms, 7 bathrooms, 2 powder rooms, a gym, and an elevator. It features a rather sweeping marble staircase, a garden, and 2 terraces. The seller paid $21.5 million back in August of 2005 and then completely renovated it. This house is apparently in very good condition, and the annual real estate taxes, if you're curious about that, are almost $138,000. The number 2 contract was Unit 406 at 1 Central Park South. It was asking just under $19 million. It was listed not so long ago in February. This is a 3,912 square foot apartment. This is in the Plaza Hotel. It is a little over 3,900 square feet. It is a condo, has 4 bedrooms and 3.5 bathrooms. Formerly the hotel suite of Frank Lloyd Wright from 1954 until his death in 1959. This unit has 13-foot ceilings, 30-foot living room, 23-foot formal dining room, and a 22-foot primary bedroom. They all face Central Park. The seller paid $13 million in December of 2009 and got renovated 2 years later. The apartment has Venetian plaster walls and was featured in one of the issues in 2014 of Architectural Digest. The residents of the plaza have a private entrance and access to all hotel services, concierge, doorman, gym, and garage. The total weekly asking price sales volume, 211,200,000. The average asking price, 7,542,857. The median asking price, 6,422,500. And the average discount from original ask to last asking price, 7%. And the average days on the market, 302. That's it for the luxury market report. Any questions, post them below. Stick around. We're going to be talking about Manhattan and Brooklyn. And then at the end, I'm going to wrap it up, give you some additional information as well as best strategies for success. The supply in Manhattan last week rose almost 53%. 506 properties came on the market. Contract signed 210. That actually fell a little bit, almost 15%. The off-market properties, 112. That's also down about 13% for the week. The monthly supply, 2012, is down about 2%. Contracts signed, 1,066. That is up just under 1%. The off-market properties rose for the month 63%, 558. We continue to be in a neutral place in the Manhattan market, balanced between buyers and sellers. It is up about a little over 2% from last year and kind of a wash for last month. The liquidity pace, 1,066. This is a 30-day moving window of contracts signed in the last 30 days. That is down 3.2% from last month and up almost 9% from last year. That's it for Manhattan. Any questions? Post them below. You can always reach out to me directly at Sotheby's if you prefer. And now we're going to take a look at what is going on in Brooklyn. The The supply in Brooklyn for the week, 284. That is up almost 81%. Contracts signed, 157. That is up almost 26%. And the off-market properties also rose about 16%. 60 properties came off the market. For the month, the supply in Brooklyn, 1,028 fell, a little over 1%. Contracts signed, 592. That's up a little over 2%. Off-market properties rose just under 20%, 254. This market pulse in Brooklyn is neutral. However, it is kind of falling. There is not as much demand. So the market pulse in Brooklyn has fallen a bit, although we continue to stay in essentially neutral territory. The liquidity pace, the 30-day moving window of contracts signed in Brooklyn, 592, is down about 2% from last year. That's it for Brooklyn. Any questions, post them below. We're going to wrap this up now. I'll share some additional information with you, as well as strategies to help you be successful if you are actively buying or selling in the New York City market. So now for the wrap up, there were 28 contracts signed in the luxury market. That is 5 fewer than the previous week. 3 of those were in the trophy category. 21 were condos, 4 were co-ops, and 3 were townhouses. Most of these contracts were uptown, 19 versus 9 downtown. If we look at the data for the Manhattan and Brooklyn markets, we see we continue to be in a kind of a neutral place in both markets. The supply in Manhattan is up 7,068 properties in total, and in Brooklyn, 3,421. The pending sales in Manhattan, 3,235. Brooklyn, 1,951. Average days on market in Manhattan has fallen a bit, 87, and as well as in Brooklyn, 59. And the liquidity pace, this 30-day moving window of signed contracts in Manhattan, 1,066. Brooklyn, 592. So as we move into May, what is the remainder of the spring market going to look like? It's hard to be 100% certain. However, the trend is that supply is rising in both Manhattan and Brooklyn. However, in Manhattan, maybe this has to do with some of these macroeconomic factors going on in the background. We are seeing a bit of a pullback in terms of demand, whereas in Brooklyn, we are starting to see a kind of a strengthening of contract activity. And that is definitely surprising. Brooklyn has been quite quiet for the last few months, so great to be seeing that. Hard to say whether that will continue, but, we'll see. These mortgage rates are in, and they have kind of staying the same. So I always like to share these mortgage rate charts with you. For the week, I think it's helpful to keep an eye on the rates. Rates are a little bit up and down, but for now, let's call them, kind of hovering around the same. No big news there. There are so many moving pieces right now, both in the kind of big picture and the small picture. So I wanted to share this chart with you that addresses price per square foot and what we've been seeing. We'll start with Manhattan, this resale condo price per square foot. It shows Manhattan prices per square foot notching higher, a record high actually of just under $1,500 a square foot. But again, with our data being delayed, this data was from March. And of course, that was before the big macroeconomic news hit. And we have been seeing Manhattan's deal volume beginning to kind of decline a bit. Here's where this information could be helpful to you if you are a seller or a buyer. If you're a seller, you're trying to price in alignment with this market, which means you're using the comps available to you. However, those comps are based on information and a time when the world maybe looked a little different. So you're not wrong to do that. Where the disconnect may possibly come in is that now, with things being a little upside down, buyers are very likely going to expect some kind of discount on those prices. So be prepared on both sides. You could say the same really for Brooklyn. this is why I share these charts with you, because it is confusing. The data is a little delayed in Manhattan and Brooklyn. We can't control that, but what we can try to do is put all the pieces of the puzzle together so that we can take that data and run it through the filter of what is happening today. If you are a seller in this market, market conditions are essentially balanced and neutral. That has not changed. Again, your asking price to be successful and to get your property sold as quickly as possible, which is how you make the most money, you want to be sure your asking price is in alignment with the market. As I just shared with you, you have the data available to you for what was happening in March, but as things have happened in April, you may need to be a little more flexible with the buyers when they approach you with an offer, because the world looks a little different to all of us, and that does get reflected in prices. If you are a buyer, you do have more inventory to choose from. This is always good for buyers. Be aware that when you're making offers, you may find with those properties that just came on the market, there's a little less negotiability. It'll depend very much on the circumstance of the seller, how quickly they need to sell. So you can always give it a go. But overall, really for leverage, be looking at those properties that have been on the market at least 120 days. I've shared charts with you. You know that after 120 days, the average discount on that is about 10%. Market-wide, maybe you'll get 10%, maybe you won't. It'll just depend on how those properties are priced, how many price adjustments they've already made. Okay, as you can tell from this report this week, we have a lot of information that would suggest things are shifting. We don't know if this is a kind of a trend or if this was a one-off week, but I hope that this information was helpful to you. Please reach out to me, though, with any questions at all. It is a complicated market, and New York City has always been a challenging market in which to buy and sell, but now it is particularly so. If you have any questions, reach out to me, post your questions below, contact me directly at Sotheby's. I'm always happy to help you sort out your real estate puzzles. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.